The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon. Welcome back. Today is Friday, 18th day of December, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, there's a big microphone. Click that. Follow the instructions. You'll be registered in about 30 seconds and you won't have to ever register again. That's right. Now, when you register that way, what happens is not only do you have access to the chat box so that you can ask questions and participate in the discussion, but each day you will get an email right before the show starts. In the email, there's a link. You click the link, you're in like Flynn. Also, if you go to youtube.com, in fact, I want to make sure this works. So if everybody within the sound of my voice, even those who are listening after the fact, I just want to make sure this works. Go to youtube.com, get your browser open. Okay, ready? All right. youtube.com/CFRN. I hit enter. Okay, now on the right-hand side of the screen, you should see a little red button that says subscribe. I'm not sure that doggone thing's working. If you would just click it and then let me know if it worked, I appreciate that very much. Okay, all right. And as you'll see, we also stream live on YouTube during the show. On days you're out of the office, away from the desktop, you can always just point your browser, any internet-connected browser, to cfrn.net/live. And there you'll find a real-time simulcast of the show as it unfolds. You just don't have access to the chat box. Okay. Now, since you know how to get to YouTube and to the CFRN page on YouTube, let me say this. We have about 1,700, I think it is, individual daily broadcasts that are archived there. Now, we've been doing a live show every day since 2005. That's 15 years. And there's roughly 250 trading days in the year. And so we've done a show every trading day since April of 2005. But we only added the video function back maybe 2010, 2011, something like that. But if you want to know more about who we are, what we do, how we do it, why we do it, all of that, somewhere in all those video archives is the answer you're looking for. Now, when someone new comes along, I always suggest this. Go back a week, go back a year, pick a show at random. You don't have to watch the whole show. Just fast forward the part where Mike is doing the recap. He does a recap of the live training room, then I do a recap of the alerts. Okay. Now, what you'll find interesting, if you go back a day, a week, a month, a year, 2 years, we're using the same language. We're showing you identical charts. We're using the same indicators. Nothing's changed. It's not because we don't want to keep up with the times. We don't want to break anything. See, when something works, leave it alone. I've seen too many people over the years who had a definable edge. They try to put an edge on the edge, and pretty soon they have no edge. So we haven't touched a line of code in our indicators in over 8 years. Haven't changed a rule to our trading strategy in over 8 years. And some people would say, well, that's not possible because the markets are always evolving. The markets are always changing. One day they're up, the next day they're down, the next day they're sideways. That's true. But the underlying principle upon which markets operate has not changed since the inception of the markets. You got buyers on the bid, sellers on the ask, price channeling back and forth and back and forth. Okay. So our methodology, our strategy is super simple. It doesn't try to outthink, outsmart, outfox, outrun, outdistance, out anything the market, because the market's always right. So if we just work really hard to do what the market's doing, what we've found is we're still going to miss the boat about 20% of the time. Because even though no one can know the future with certainty, God says so, even though no one can know the future with certainty, you can know what the next high probability move is in the market, once you understand how to read the chart. And that's something that we teach you. So, with that said, let's open with a word of prayer. Heavenly Father, we thank you that you promise us that where 2 or 3 are gathered, you are right there in the midst. We welcome you today. We celebrate the gift of life that you have given us. We ask that you would open our ears so that we might hear your voice, open our minds so that we might receive your wisdom, open our spirits so that we may know your leading and your guidance. Open our hearts so we may receive your love. We ask this in Jesus' name. Amen. Okay, happy Friday. I haven't said that already. Let me give you the numbers from around the world. These are the cash markets, the indices. Let me refresh my data. We'll start here in the US. Been an interesting day. Currently, the Dow is down 174 points. NASDAQ down 25. S&P 500 down 20. And the Russell 2000 up 8. No movers, no shakers. In the commodity basket, crude oil up 65 cents, trading 49.01 last. That's a gain of over 1.25%. Gold down $1.40, trading 18.89 last. Silver down 12 cents, trading 26.05 last. In the Asian markets at the close, Nikkei posted a loss of 43 points. Shanghai dropped 9. The Hang Seng fell 179. And in the European markets at the close, FTSE down 21, DAX down 36, the CAC down 21. That gives us a red day in Asia, red day in the UK, and we got a mixed day here in the US of A. We've got the Dow, the NASDAQ, the S&P in the red, but the Russell 2000 is up 8 points. Now, the four major indices, the Dow, S&P, NQ, and the Russell, they tend to travel as a pack. The Dow and the S&P are kind of joined at the hip. If there's ever going to be an outlier, it's usually the NASDAQ or the Russell. The Russell, we call that our man in the street because that represents 2,000 small cap companies. The Dow, that's 30 blue chip companies. S&P is 500 large cap companies. The NQ, a lot of tech stocks. But the Russell is just kind of a regular guy, right? And while the Russell does not lead the markets on any kind of a regular basis, when we see the Russell diverge from the pack, it's worth watching because sometimes a man on the street knows what's up. You can see up on the screen, we're in week 124 of Logic 247. That is our premier Emini Alert service. So far this week, since Sunday night at 6 p.m. Eastern, that's when we opened the channel for business, 66 alerts have been issued, 9 never triggered, still waiting on the outcome of 5. So we had 52 actionable alerts. 8 of them were stopped out based on not risking more than $300 per contract per trade, less when possible based on market structure. So that's 15%. The average over the last 124 weeks has been 20%. Now, last week we had an inordinately high number of PTs compared to the FTs. And I told you, in fact, I think the first day of this week, it was carrying over from last week. But I said over the last 123, 24 weeks, what we tend to average is about maybe at the most 33% PT to FT. And so we're closing in on what's normal, and this is better than normal, okay? So with that said, let's go to Michael and get a recap of what happened this morning in the live training room. When he's done, I'll be back. We'll go over Concierge Trade Alerts and the Logic 247 alerts from today and yesterday. And then this afternoon, we have a webinar for everyone that's been on the open house. Going to show you things, talk to you about some stuff. It's really a Q&A session. It's an opportunity for you to ask me whatever you want. All right, Michael, I see you got the charts. So
Yep.
I'm going to drag it up into place, position it properly. And you're off to see the wizard.
There we go. Okay.
Take it away. It's all yours.
Man behind the curtain. He died, you know. No surprise.
I did not know that. I do remember hearing that the last of the little people had passed away. A lollipop field.
Yeah.
I mean, that was a few years ago.
Yeah, somebody from the Wizard of Oz died just a few days ago.
That one might have been Dorothy. She's probably the only one young enough to still be around.
Yeah,
Because the
I don't
wizard,
know who it was.
the wizard was an old guy when
he was an old guy back then.
Was made. Yeah, so maybe it was Dorothy.
I don't know about that, but I just, you know, I don't really watch news or pay attention to the news because it's always bad news. And
Yeah.
there you go. Somebody died. More bad news.
Yeah. You know, when I was a kid growing up, the Wizard of Oz was like, it was a big deal. I mean, you waited and waited for that thing, and boy, you were in front of that TV on the night it came on, and if you weren't there at 7 o'clock when it started, there was no rewinding it. We didn't have VCRs or there was no cable channels. I mean,
you had to get up and change the channel.
You were there. You were either there and watched it, or you missed it and had to wait a whole nother year. I tried to get my kids jazzed up about the Wizard of Oz, and they're tiny little span of attention. They couldn't even sit still through the whole movie. So,
I know. Get them to watch the Charlie Brown Halloween thing.
Unless they're doing something with their thumbs, they're not happy. So,
well, anyway, they gotta have
Did
like
you
100
ever
things
figure out
going.
those sticky fingers?
No.
I'll explain. Think about it.
Okay.
You got it. Okay. All right.
All right. Let me get into it.
I was
4 o'clock.
muted.
Oh, did you figure it out, Valerie?
No, but the only thing I know that it could be referring to is stealing, but
no,
I don't know how to plot.
You were talking about picking bottoms. Picking bottoms can lead to sticky
boy
fingers.
humor.
Bad joke, but
Boy humor,
I wasn't
and I
trying to
missed
do
it.
I know. Totally.
I'm so disappointed.
Never figured that out.
It
Absolutely.
was a really interesting meeting. I met with the guy today via Zoom, the guy in Beijing. Man, I'll tell you guys about it later. Okay, go ahead.
We'll talk later. All right, here we go, everybody. Today is Friday, the 18th day of December, 2020. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, I lost 8 ticks in the euro, but I made 24 ticks in gold and 6 ticks on the ES. Put me at plus $265 on the morning session. And today it took me 24 minutes and 3 trades to get to the goal for the day. At that point, I was up 125 bucks. That's one contract. And today I took a total of 10 trades. You're going to see in a minute that I missed a bunch of trades, but today is a really, really choppy day. Really choppy. And it's tough trading, but I'll go through all that in just a minute here. So on the month, we're up $4,033. That's over 13 trading days, averaging $310. That's one contract in 2 hours per day. We have now gone 210 consecutive days of getting my goal, and we are well on our way to achieving what I wanted to achieve. And so now on the year, we're at 99,337,000. That's over 235 days, averaging $422 per contract per 2-hour day. Okay. Let's see. To take the free trial, if you have not taken it and you want to take it, go to the homepage here at CFRN.net. Right here it says free 5-day trial. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all we ask for. We give you a bunch of information, but all we ask for is your name, your email, your phone number. You can tell us your biggest trading challenge so we can tailor one training just for you. And We'll be doing a lot more of the one-on-one training next week. Just hit the send button. You'll be sent a confirmation link. You got to hit that confirmation link or we don't know you took the free trial. Okay. But I'm returning from the dead. Feels like. Okay, so on gold, on all the markets really, you know, they had little bits and spurts of action. And on gold, you know, it was really, really choppy. You didn't want to trade anything. Then we had an awesome trade right here that I missed. Another one right there that I missed. Another one right here that I got. And I think I only picked up 4 ticks on that one. Then I had another one right here. Oh, hang on, let me put my glasses on so I can actually see. Where I picked up 10. Then another one right here where I picked up 4. So at that point we're at plus 18. Then one here that was a break even, and another one here that was 6 ticks to put me at plus 24 on the morning session. Then I was talking and training more than anything else, and I missed this, this, and this, all of which would have been profitable. And then it got really choppy, and I wouldn't have traded a thing in there. And you know, this morning I was saying that pretty much across all the markets. You know, it's quadruple witching Friday, and the markets were just all over the place, and they just weren't making sense. You know, I'm reading, like right now, gold wants to go down. I don't know what the actual chart looks like, but I know what the DOM looks like. Yeah, gold wants to go down. Okay, so the short here on gold would have been from, hang on, right there, 88.3. You know, where does gold want to go? 88, I'm sorry, 87.0. That's where gold wants to go. And it should go there right now. Let's wait and see. Give it a second. On the hero, I just had the one stop out trade that I just showed you. On crude, I didn't trade today because it just wasn't tradable. But let me show you why. See, in the pre-market, you know, crude opens up at 9. And so there were some good trades. Well, there was one good trade here in the morning session. And then it pulled back, and then it gave. I really didn't want to do this because the slingshot wasn't right. And you know, all morning I was watching the slingshot, and the slingshot was not letting us get in any trades. So it was keeping us out of all of this chop. And that's a good thing. So I didn't trade crude at all today. And let's go to the ES. We did trade the ES a few times. 4 times. Okay, our first trade on the ES was right in here. And we picked up 4 ticks on that. The second one was right here. We picked up 2 ticks on that to put us at plus 6. Then it just got really choppy in here. And again, the slingshot's keeping us out of all of this mess. And we had a break-even trade here and another break-even trade here. And we missed one right there. And during the break, there was nothing. But so it gets out to 1887.3. And it's interesting. The pullback area on gold right now is actually 88.5, but I still think it's going to push down to 80, 87 even. Okay, so if you get a trade opportunity right here in gold, I mean, there was one up here at 88.3, and it dropped 10 ticks, and now it's pulling back. 88.5 happens to be right at the BBC. But if it starts going down before then, which it's doing right now, then 87 even is where gold is trying to go. Okay. Sorry, I know that was really fast, but let's go back here. And sorry, if you have not taken a free trial, go to the homepage at CFRN.net. Right here it says free 5-day trial. Click on that. It's going to bring you to eminitrainingschool.com. If you scroll down, all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. And we really do the one-on-one training. You know, you can have it with either of us. And you know, Dwayne has a scheduled time frame that he works in, and I will work it out around your schedule and my schedule, and Val will too. So just do that and hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link. If you don't, we don't know that you took the free trial. Okay, back to the spreadsheet. Today, I'm still loving that 1887 number on gold. Today is the 18th day of December 2020. And today I lost 8 ticks in the euro on my one trade there. I made 24 ticks in gold, and I made 6 ticks on the ES. That put me at plus 265 per contract on the 2-hour morning session. Now, the goal here, you know, that might not look like a big number, and this might not look like a big number, but I'll show you something in a minute. Today it took 24 minutes and 3 trades to get to the goal for the day. At that point, we're up $125 a contract, and I took a total of 10 trades this morning. So on the month now, we're up $4,033. That's on the month, over 13 days. And I missed most of the trades because I'm training. But we're averaging $310 a contract per day. I've gone 210 consecutive days getting the goal. On the year, we're at $99,337. That's over 235 days, averaging $422 per day. Now, this is one contract, 2 hours per day. If we added one contract per month, let me just put the formula in. Hang on. Hang on. I think all I have to do is copy that and paste it there. Yeah. So if you added one contract per month and did everything the way that I did so far this year, you'd be at $659,000. That's, you know, if you did everything exactly the way that I did. This is actually wrong. It needs to be, this needs to be times 12. And this needs to be times 11. So it'd be $674,000. Anyway, trade on gold was a touch of the BBC or trendline trade, Alex. This would have been, this right here was a trendline trade right here, right on the trend line. Okay, and the next one, see, it didn't actually hit the BBC right there. And the next one would have been right in here. Hang on, let me draw it properly for you. Yeah, you see the next one, we had to break this dynamic support. It should have gone right down to 87 in this move right here, but it's pulling back. And I think 88.5 is where I said it was going to pull back to. And it just did that. And so right now it should push down, but the numbers are all messed up. Looking across the markets right now, the ES, not looking at the charts, I'm just looking at price. And the ES wants to go up. Crude wants to go down. Euro wants to go sideways. And gold right now wants to go sideways. So we're likely to have some chop here. Okay. Looking at the charts, We have bearish separation, but we're trading above the BBC, so we don't want to do anything. Bearish separation, trading above the BBC, again, do nothing. No separation, we're trading above the BBC. So I would say, you know, we'd be looking for a long if we could get it on the euro, but I don't think we're gonna. And the markets have been like this all morning. You know, they've been really messed up today. This bar did close down. This one right here is what I was talking about. That bar did close down. And so that's where I was looking for it to get down here to 1887. And I still think it's going to get there. It pulled back a little deeper than I thought it was going to. But markets are really messed up today. They're complicated. But that's why, you know, when I got in this morning and I was just looking at everything that was happening, I was thinking, well, everything that I'm seeing, it has to be an agreement. And, you know, sometimes you'll see trades set up and I don't take them, but I'll tell you in advance why I don't take them. You know, the charts have to agree with everything else. But now as you see the slingshot cycle is turning up too steep on GC. Yeah, it is. You're right, Jake. Excuse me. Okay. So, for all you guys that were wondering yesterday, good news is I don't have COVID anymore. Bad news is I have pneumonia. But anyway, let's get to the other good news is they gave me medication, and that's why I may be acting a little unnormal. Okay, so if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today's the 18th day of December 2020. I lost 8 ticks in the euro. I made 24 ticks in gold and 6 ticks on the ES. Put us at plus 265 on the morning session. And today it took 24 minutes and 3 trades to get to the goal for the day. At that point, I was up 125, and I took a total of 10 trades. On the month now, I'm up $4,033. That's over 13 trading days, averaging $310 per contract per 2-hour trading day. We've now gone 210 consecutive days of getting the goal. On the year, we're at $99,337,000. That's over 235 trading days, averaging $422 per contract per trading day. And if I look at the calendar, we have 1, 2, 3. Dwayne, you said we were going to quit after.
I'm sorry.
Well, Christmas Eve.
Gonna do what?
We were gonna.
You know, I'm gonna be around. Is the market open a half day?
Probably.
I might still do the show, or I mean, if you guys want to take off, that's no problem. But I'm going to be around. I won't have anything else to do, so I might do a show. I might even do an hour of the room, and just do some, 30-minute, 5-minute trading, as opposed to the range chart that you do every day. So
I was just looking at
a chance to see that.
Okay, I was just looking at the number of days of trading. Excuse me, that I have left to get to my goal for the year.
Now, I think I heard somewhere that maybe, I don't have the calendar, but
7
I
trading.
heard that Christmas Eve, maybe it's not going to take effect this year, but next year, Christmas Eve is going to be an official holiday. I think Trump submitted an executive order to make Christmas Eve a federal holiday. Christmas is a federal holiday, and he wants to make Christmas Eve a federal holiday too. So this could be the last Christmas Eve I get to do a Christmas Eve show. So maybe it will. I'll make
We'll
sure
see.
everybody knows by next Wednesday.
Yeah, we'll get into it next week. I just remember seeing a Telegram message from you.
Yeah.
Okay, so if you have not taken a free trial with us, go to the homepage here at CFRN.net. Click on free 5-day trial, no credit card required. It says EminiTradingSchool.com on this website. All that we ask for is your name, your email, your phone number, and you can tell us the biggest trading challenge so we can tailor 101 training just for you. Hit the send button and you'll be sent a confirmation link. Okay, that's all you have to do. And we really do the 101 training.
We really do.
We really do.
Other people say they do, but talk to some of their clients and find out if they really do. You'll find out they really don't.
Yeah, they really do. Marianne, I'll do that 101 with you if you want. Okay, it'll be more meaningful if I do it 101 with you.
Valerie, do we have a link yet for the webinar this afternoon?
Yes, we do.
Okay, doke. I just want to check. I'll grab it and put it in the chat box or something for the good folks in the audience here.
I will
This is
do
a
that.
Q&A, ask me anything. What do they call that? An AMA webinar. Ask me anything. Yep.
AMA. Okay, and that's at 4 o'clock Eastern,
That is at
right?
4
That's
o'clock
correct.
Eastern.
Okay. All right.
Okay.
I will try to be there. All right, guys. With that, I'm going to pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, it's all yours.
Okey doke. I will grab it.
Marianne, send me an email
There
at
it is.
tech@cfrn.net. TECH@cfrn.net.
Yeah,
Okay.
that might be Don as opposed to Marianne.
Okay.
I think he registered with his wife's name for the radio show.
Okay. That's fine. Either way, send me an email.
Oh, it is actually Marianne. Okay, great.
It is Marianne.
Okay. Sorry about
Well,
that.
send me an email because it's something that's really super simple, but there's a few things you got to understand about it. So I don't want to go over it right now. It's cold down here. I think I haven't been outside yet. Beautiful sunny skies, but
I heard in some parts of the Northeast, they got more snow the other day than they got the entire winter last year.
yeah, they got like
It was snowing in
New
Central
York.
Park. Yeah, I've always wanted to be in Central Park, or when it was snowing, I've always wanted to be at the Rockefeller Center where the skating rink is.
Yeah, no, you don't.
That's on my bucket list. Not because I want to skate, but just because I've seen that so many times in movies and on postcards. And
Yeah, you know what? Go to Gillette Stadium in Massachusetts, in Foxborough. They have a skating rink there that will be much more sane.
yeah, but the iconic one is the one at Rockefeller Center.
Yeah, I know.
They've
But-
written songs about it and poems about it and made movies around it. Anyway,
But
so
I mean, you don't like the cold, and neither do I. So I'm never going back up there. I'll go to Connecticut. That's as far as I'm going. All right.
So,
It's hot.
ladies and
It's off to you.
gentlemen, we've been trying to get, I've been working for a long time on getting CTG listed on major exchange. And let me take a different route. Coming soon to a web browser near you. This may say CFRN. That's what that meeting in Beijing was about today. So
Yeah, you mentioned that yesterday.
pretty neat. It's got all the bells and whistles, it's got everything. So anyway,
Nice.
I'll send you guys a link on Telegram. Okie doke. Logic 247 are around the clock. Oh, recap of the recap.
24 minutes, 3 trades, $125 a contract.
That's a good job.
Thank you.
Okay, Valerie, thank you so much for the link. Okay, guys, this is a 4 o'clock Ask Me Anything. and ask Michael anything if he is there. I'm going to put it in the, not the question box, but the chat box, because that creates a clickable link. And there it is. 4 p.m. Now, if you've been around forever, I'm not breaking any new ground, but you're still welcome to come. But if you're on the open house, on a free trial, then you should come, because you're why I'm doing it. So there we go. So it is in the chat box, not the question box. And I'll put it in the Telegram discussion channel and all that good stuff. Okay, so Logic 247, our around-the-clock Emini alert service. Now, what Michael does in the morning, what Michael just showed you as he went through the charts, every day, 9:30 a.m. to 11:30 a.m. Eastern, every trading day, he's there teaching you our methodology, our strategy, teaching you how to read our indicators, everything you need to know. So, yes, we teach you how to trade, but also, while you're learning how to find these opportunities yourself, we provide you with alerts in the S&P, the Dow, the Russell, the NQ, crude oil, gold, silver, occasionally nat gas, sometimes a euro, or now if there's something happening. Okay, now the criteria for an alert is whenever opportunity presents itself. So it could be 2 a.m., it could be 2 p.m. Some people say, I don't want to trade at 2 a.m. Well, don't. You know, just turn notifications off on Telegram so that your phone doesn't keep you awake all night. And then when you wake up in the morning and you're ready to trade, you turn the notifications back on. And all the alerts that came out while you were sleeping will still be there. Important prices, important areas are almost always tested. So if an alert triggered while you were sleeping, there's a good chance it will trigger again, and possibly again, possibly even again. And as you're looking at the inventory, there'll be fresh alerts coming out the spigot. Drip, drip, drip. So far this week, since Sunday night at 6 p.m. Eastern, we've issued a total of 66 alerts. 9 never triggered. Still waiting on the results of 5. So that gives us 52 actionable alerts. 8 were stopped out. That's 15% of the actionable. Our criteria for risk management is we use market structure. I teach all of our traders a 3-step methodology. The idea is that we do not want to risk more than $300 per contract per trade, less when possible.
Dwayne, did your audio go out or is it me? Okay, thanks, Marianne. Okay, I've let Dwayne know. We've let Dwayne know in the question box. Thanks, guys. Now, hopefully he'll get this resolved. Well, it doesn't look like he's read my text yet, so he may be dealing with something here real quick at the office.
Or crude oil or gold, you know, you can trade 50 contracts or 100 contracts.
You're back.
You did an interview. I'm sorry?
You're back.
I didn't know I was gone.
Yes. We've been trying to give you a heads up.
How long's that been?
Since about 43, so about 6 minutes.
Huh. Okay. Well,
So you may want to bring a chart
back up. Guess I can back it up. Did I talked about the Emini Alert Service. Purpose of the Emini Alert Service is so that you don't starve while you're learning our methodology and our strategy. I said that when you're trying to learn something, the typical way you learn is you see the examples. You know, something gets explained to you, and then you have examples in a textbook, or maybe you watch a video, or maybe you have a PDF. That's one way of learning. The other way of learning is to have, as you're taught something, to be able to go out and apply it in the real world. That cements it. That makes it really stick in your mind. Like in chemistry, in high school, where you get to play with the beakers and the test tubes and the Bunsen burners. A lot of that really sticks in your mind because you're getting hands-on experience, as opposed to just hearing a teacher drone on and on and on. And then you're looking at an example in a textbook that's 5, 10, 20 years old. So you start out with us in the simulator, in the demo account, no matter how much trading experience you have, because obviously if you've come to us, whatever you were doing in the past maybe just wasn't working out the way you had hoped it would. So you spend as much time in the simulator as it takes to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you do that, the blueprint will give you the green light to go live with one contract. If you opened your account with $3 grand, once you go live, you're trading real money. The goal is to increase your account balance by $2 grand. So if you opened with 3, you want to get it up to 5. If you opened your account with $5 grand, you want to get it up to 7. Once you've increased your real money account balance by $2,000, the blueprint will give you the green light to go live or to add a second contract. Once you put together 10 consecutive days in a row in sim, you get the green light to go live with 1. Once you increase the account balance by $2 grand, you add a second contract. The blueprint will say, okay, time to add number 2. The difference between number 2 and number 1 is number 2 is being added with profit you earned in the market. The first contract that you go live with, that's funded by your opening deposit with the broker. But if you follow the blueprint, then number 2, number 3, number 5, number 10, you're always adding the next, you're increasing your trading size with profit you earned in the market. Now, when you buy, when you trade stocks or equities, you're buying shares. With futures, it's called a contract. So if you are just starting out as a day trader in the world of stocks and equities, you might have a small, trade size of maybe 100 shares. But as time progresses, and you earn money, you might start trading 200 shares, depending on the price of the stock. The price of stocks fluctuate, but the cost of a contract is constant. It's called margin. Now, a lot of people, when they hear the word margin, oh, I don't want to trade on margin. I heard about all those people that lost their homes back in the dot-com bubble. It's not the same thing, okay? Margin, in regards to futures, is more like your wife tells you you've got to shampoo the carpets this weekend. So you got to go to the grocery store, you got to get one of those big rug shampooers, and it's an expensive piece of equipment. So they want a deposit. You got to leave a couple $100, $300, credit card, something, so that they know you're actually going to bring back their rug shampooer in good condition. So you have to put up, like right now, because we have had some increased volatility of late, so margins have gone up. Over the past, I don't know how many years, we've been able to trade the S&P 500 and the Dow and the Russell and the NQ intraday, that's during the day session, for $500. Right now, the S&P is 750. In fact, I've got the margin. Got it right here. What happened? It's not working. It really isn't working. Can't get rid of it. Oh, there we go. It opened up. Let me just close that. Start over. Opera crashed. Close all windows. It doesn't want to close. Okay. There, it finally closed. Try it again. Didn't close. So, can you guys still hear me?
Yes.
Okay, just want to make sure. Don't have to redo all that again. I just rebooted today too, so that's not the issue. Okay, well, we'll just keep going. Let's go to the daily chart. I was going to show you the margins, but right now, S&P is $750 per contract intraday, and the night margin is like 15 grand. But here's the thing. When you put up $750 to trade the S&P contract intraday, or you put up $15,000 to trade it on the overnight session, you're not agreeing to lose $750 or $15,000. The amount that you're willing to risk is determined by your stop loss. That's why you always got to have a hard stop in place. Now, if you trade without a hard stop, then yes, you could lose the whole $750 or the whole $15,000. That's why it's important that you have a stop loss in place. As I just said, in the live training room, you'll see Michael. He teaches you to use an 8-tick hard stop on everything. So the S&P, that's $100. On the Dow, it's $40. On crude and gold, it's $80. Okay. With the alerts, we don't want to risk more than $300 per contract per trade. So two different things. Okay, Tim, I'm tied up right now, so I'll answer your question here a little bit later. Okay, not Tim C, Tim S. Okay. All right. So does anybody have a question about margins? Okay. Maybe you didn't understand that. You don't know how it works. I just gave you a fairly reasonable explanation of how it works. Does anybody have any questions on that? I'm going to go to Task Manager and see if I can get this window closed that I don't want open. End task. There we go, just like that. Ended the task. Okay. All right. So everybody's good on margins. You know what that is, how it works. If the margin, like right now for silver, margin's 15,000. It was 18,000. Now it's 15. You're not saying I'm willing to lose $15,000. The amount of money that you're willing to risk is determined by your stop loss, not what it costs to participate. Think of it as a participation fee. It's like a deposit. Okay. All right, so this is what we've done so far this week in Logic 247, but we have two different types of alerts. We've got these that come out around the clock, 24/7, from Sunday night to Friday afternoon. But then we also have the Concierge Trade Alerts, which only comes out once per session, right after the Globex Open, shortly thereafter. I send out a static report. Now, the static report is designed to give you forward guidance for the entire session. And they look like this. So last night I got them out at 8:15. Usually it's closer to 6 p.m. Eastern. It's two numbers for each market we cover. If price starts taking off in the direction of 37.20, then you're in an uptrend and you want to get long, or you can wait till you get to 37.20 and get long, or you can wait for price to get above 37.20 and get long. If price starts to drop, you want to get short as you head into 36.91, or get short right at 36.91, or only look for short trades below 36.91. Above 37.20 in this example, these are the actual numbers from last night. Above 37.20, you only want to be looking for long trades. Below 36.91, you only want to be looking for short trades. Okay. While I've got this up, let's go ahead and just do this before we go to the chart. Okay, this is what the Logic 247 channel looks like. These are ones that we're still waiting on a disposition. This was a short on the NQ. The way you read it, S is sell, T is initial target, PS is potential support, WTZ is weekly trading zone. So the idea here is to be short 12,676 with an initial target of 12,666. That's 10 points. The NQ pays $20 a point. That's $200 per contract traded. Second target is at 640. And then the final trade to target, the weekly trading zone on a short. The final trade to target is always the weekly zone below. On a long, or when you buy the market, the final trade to target is the weekly trading zone overhead. Here's a short on the Dow, the YM. Still waiting on results, still waiting. This was a long on the NQ. You buy at 12,770, the initial target 780. That's $200 per contract traded. And then the final trade to target is 12,801. But the swing high of the move at the time the recap was done was 12,781. Stop out on the Russell, stop out on the Dow. This was a long on the S&P to be long at 37.19. Initial target 37.21. And the swing high at the time the recap was done was 37.21 1/4. This is a short on the Dow. That was worth $120 per contract. This was a hedge short on the Russell. It's worth $90. And you see the Z's, that's no trigger. Price went the other way. Never triggered. Russell, long. Stop out on the NQ. A long on gold. That was worth $1,200 per contract traded. That's what the market made available. The swing high was exactly 1902. What do we got? Silver. Gold pays $100 per point. A point is $1 of movement in gold. So it went from 1890 to 1902. So that's 12 points, or the price of gold went up $12, and it pays $100 per point per contract traded. So if you're trading just one contract, from the entry to the final trade to target, $1,200. Now, once you've earned the right to trade two contracts, this exact same trade with two contracts is worth $2,400. This exact same trade with 10 contracts is $12,000. The worst thing you could possibly do is open an account and start trading a large number of contracts. Do the right thing. Start in the simulator. Put together 10 consecutive days in a row. So we're not asking you to put together 10 consecutive days in a row because we want to torture you. We want to help you. We want to see you succeed. We want you to become a consistently profitable trader. So if we thought there was some other way, then we would show you that way and we would teach you that way. But you got to just roll up your sleeves. Got to learn the methodology. You got to learn how to read the indicators. Got to ask lots of questions. Our strategy, compared to most of the methodologies and strategies out there, is so super simple. We only have a couple indicators on the chart. Now, we're basically price action traders, but we do have a couple indicators because it makes it easier to see what price is doing. Okay. This is silver, 350 per contract. That's what the market made available. This is a short on crude oil. We've now rolled forward to the G contract, GCLG. Stop out on silver, long on gold, $1,500 per contract traded. Crude oil, $60 per contract traded. It happens. Obviously, it didn't go to the final target. When you see a PT, that means it went at least 60% of the way to the initial target, 60% or better. Okay. Here, this was the Russell. This is a long. Initial target, potential resistance, target number 2, target number 3, target number 4, target number 5. So at 1971.50, it made it to, it hit this target, it hit this target, and it exceeded that target by 1.5 points. So the market made $625 per contract available. This is a long on the Dow, 690. Long on the S&P, 825. A long on the S&P, 475. Long on gold, crude oil, silver, NQ. Now, I'm just going to scoot right up to the top. Otherwise, it'll take us forever. A lot of alerts this week. Scrolling, scrolling, scrolling. Okay. We're in week 124. We start Sunday night at 6 p.m. Eastern. Once the channel opens for business on Sunday night, it remains open around the clock till Friday afternoon. What you're seeing here is Mountain Standard Time. I'm in Phoenix. The first trade coming out of the gate Sunday night was a gap fill on the S&P and a hedge on the S&P. Stop out, hedge on the Russell, gap fill on the NQ. Now, we're in week 124 right now. Come Sunday night, we'll be in week 125. Last week, week 123, we issued 77 alerts, 21 never triggered, 56 actionable, 7 stopped out, 13% of actionable alerts. Again, the risk parameter is we do not want to risk more than $300 per contract per trade, less when possible based on market structure. Teach all of our traders a very simple 3-step methodology for applying the stop loss. Now we'll go to the daily chart. And here we are. Okay. I got an open window somewhere. Is that it? Uh-oh. Where's the open window? It's not there. It's making that little noise in my headset. Ah, I see what happened. Okay, now we're all good. So we'll go back to the daily chart. Okay. This is the daily chart of the S&P 500. From the low to the high to the retracement low, using 14th century math, we're able to project out into the future where price is likely to go. This is the 24% Fibonacci price extension. We hit it, couldn't get through it on the first attempt, pulled back for 3 sessions, finally closed above it. Once we closed above the 24% target, we made a run at the 38% extension, got there, same thing happened, sent price back to the BBC. Whenever price runs into resistance, when it can't go any higher, this morning, or a couple days ago, this happened right here. No one on planet Earth was willing to pay $37.07 and a quarter. The most anybody at that time was willing to pay was $37.07. That's resistance. When price can't go any higher because no one's willing to pay that price, it will turn around and go in the opposite direction and find the price that people are willing to pay. So the low of this candle is 36.2075. Buyers came in, moved us right back up to red and falling. Took a couple of days to get through there. And yesterday we got to that 38% price target. Opened last night, we traded a little bit higher. Okay. High of the session was 37.23. Really, all we did was we spiked yesterday's high, 37.17.5. We spiked it up to 23, but there were not enough buyers in the marketplace to take it any higher. Okay, so the swing high today, nobody was willing to pay 23 and a quarter. This red candle will continue to build until we reach a point in the market where there are more buyers than sellers. When there's greater selling pressure than buying pressure, you get red candles. When there's more buying pressure than selling pressure, green candles. Okay. Price moves up or down based on this. Now, don't ever let anybody pull the wool over your eyes and tell you that the market moved because of their indicator or their oscillator or any other nonsense. The only thing that moves price is order flow. And order flow is simply buyers and sellers in the marketplace. If these guys are more committed to their positions, they're going to drive price up. these guys are more committed. They're going to drive price down. There's also another way that price can move. This red candle does not have to necessarily be because there was more selling pressure. There was selling pressure, but when buyers hit a spot that they're not able to move price through, like a brick wall, then sometimes they'll just step back. It takes financial commitment for the price to go up. But for price to fall, it can be because of aggressive selling, and it can be because buyers just momentarily throw in the towel and go, you know what? I bought 10 contracts, then I bought 10, then I bought 10. This is an individual trader talking to himself. Okay? But institutions are thinking the same thing. We bought, and we can't get beyond that price. Not going to throw away any more money. Just going to back up. Water seeks its own level, they say, whatever that means. Buyers will come back in when they think there's a battle in front of them that they can actually profit from. So we've now taken out, we have an outside day. Or do we? Yesterday's low was 36.92. Today's low is 36.83 and a quarter. Low 36.92. Low 36.83 and a quarter. Okay, this is a bearish engulfing candle. What that means is today's high is higher than yesterday's high. Today's low is lower than yesterday's low. So some people call it an outside day. Some will call it bearish engulfing. If you look here on this day, December 9th, we had a outside day or a bearish engulfing candle. The high of the 9th was higher than the high of the 8th, and the low of the 9th was lower than the low of the 8th. That is probably the single greatest bearish sell signal that the market can give you. On a 1-minute chart, a 5-minute chart, a 30-minute chart, a daily, a weekly. Now, the larger the time frame that you see that bearish engulfing candle, the more important the message is. Okay. Over here, after this, now context is important. In other words, for this bearish engulfing to have meaning, it has to come after an uptrend. If you got a sideways market and this happens, it doesn't really mean much. But we were definitely climbing. Bearish engulfing sent us all the way back to the BBC. Price always reverts to the mean. This green line, BBC, just means bull bear cross. When price crosses above it, we're bullish. When price crosses below it, we're bearish. Above it, bullish. We've been above the BBC now since November 4th. So if we close right where we are now, or lower, in other words, if this session ends with this bearish engulfing formation, now it could change. Buyers could come in. They could drive this thing up. Still going to have an engulfing candle. That die is already cast because you can't, buyers driving it up doesn't take out the fact that there was a low put in place here, the low of the day. Doesn't mean we're going to close there. If we close with this big red body, then that's more bearish than not. And so over here is sent us back to the BBC. I would expect nothing less here. Now, how we'll determine is Sunday night when we come in, and then we can actually see it. If price closes below blue and climbing, which is bullish, if it closes below blue and climbing and the step line, that's old news there. Then we'll have a window of opportunity right there. Okay, now, come on. All right. Now, somebody's probably wondering, well, couldn't I just short it here? You could. Depends on if you want a high probability, low risk trade setup. Confirmation costs money. I mean, this obviously the sooner you get in, if price really is going back to the BBC, the sooner you get in, the more money there is on the table, right? So do you want additional confirmation? If you do, then you let price get below blue and climbing, below the step line, and your window of opportunity is roughly 36.73 down to 36.43, the BBC. So from 43, that's 30 points. At $50 a point, that's $1,500 per contract traded. Just this little area I've got marked off here. Now, on a smaller time frame, you might choose to navigate lower, okay? And that's fine. In fact, we'll go to the 30-minute chart now and talk about that. So Sunday night, Globex open. If we close today below blue and climbing or the step line, then we'll look for a continued move Sunday night down to the BBC. The only thing that would change that is if buyers came in and were able to rally this thing above the open, okay? If buyers came in and ran this thing up and were able to take it above where the market opened last night at 6 p.m. Eastern, this red candle would become a green candle. So if we end the day with a green doji or a small body green candle here, then we're not so bearish coming in Sunday night. But if we continue like this, who knows, we could be halfway there by the time the market closes today. But we're sitting on top of an area that we know has the potential to be good support. Okay. That said, go to the 30-minute S&P. Bearish cross. That's what that is. Bullish cross. Bearish cross. Bullish cross, bearish cross. Now, these zones that you see on the chart, these are weekly trading zones. We publish them every Monday for our members at 6:15 a.m. Eastern. Once published, they're carved in stone for the entire week. They don't change them in any way. It gives our traders guidance. Think of it as fixed support and resistance. Now, this particular zone and this particular zone were actually published last week, not this week. This zone down here is this week, but that's last week and that's last week. Usually, the new zones completely take over by Tuesday or Wednesday. Every now and then, you'll have a situation like this. Even though these are last week zones, as we come into the area, we consolidate. That's the most likely thing to happen when you get to a zone. Whether you're approaching from above or below, consolidation, 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 consolidation. The second most likely thing to happen is rejection. That means when the time period that you're observing, 30-minute in this case, when this 30-minute candle closed, all that was left touching the zone was the wick. Price got rejected. Price got rejected and it sent it back down to the zone below, support. Support sent us back up to resistance. Resistance sent us back down to support. Support sent us back up to resistance. And resistance sent us back down to support. Now, this move, remember, only three things can happen. The most likely is consolidation. Look at how many hours we spent there consolidating at the zone. Okay, That's the most likely. Rejection, second most likely. The third and least likely, but it happens, the slice. You slice through a zone like it's not even there. Now, in this case, we sliced through last week's zone, but when we hit this week's zone, look what happened. We bounced from 36.97, we bounced up to 37.01. But selling pressure, you got red and falling overhead. So we've been going sideways for 2 sessions. Now we have some actual movement. Leg, retracement, leg. This swing low has the potential to be support. So a window of opportunity. Got to get below the low of that candle. You don't have to, but I would. So 36.87 down to 36.85. 36.87, 36.85. Most of our traders have a 2-point daily goal if they trade the S&P. If they trade gold or crude or some other market, then the equivalent of 2 points is $100. So with gold and crude, it would be 10 ticks. The idea is that you're making $100 per contract. Now, you can work to get more points. Some days the market makes that simple, other days not so simple. Since I started trading futures in 2005, I've never seen a day that the S&P did not make at least 2 points available multiple times. Some days there's an opportunity to get 5 in one move or 10, but every day there's an opportunity to get 2 multiple times. So, we all want consistency in our trading, right? Even once you have a definable edge and you got a strategy cooking, the next step is to be consistent. Can I repeat today what I did yesterday, and then can I repeat it again tomorrow? Well, since you get to make the rules, you can stack the deck, so to speak. You can become the house instead of the degenerate gambler. And you can establish the ground rules. In fact, the 24/20 blueprint walks you through that process. You write a business plan and a trading plan. The more you treat it like a business, the more it will behave like a business. If you treat it like gambling, you'll get gambling type results. And we all know that what you win in Vegas stays in Vegas, right? Okay. So this represents 2 points, or $100 per contract traded. Now you're probably thinking, I can't live on $100. Sounds good, but I can't do it. Okay. Well, remember what we said earlier. You're going to trade one contract until you increase your account balance by $2 grand. That's going to give you money to fund a second contract. So the same 2 points is now $200. And when you add your third contract, the same 2 points is $300. By the time you earn your way up the ladder to 10 contracts, the same 2 points, same 2, it's $1,000. Now, if you can consistently take 2 points out of the market and you've earned the right to trade 10 contracts, that's $250,000 a year. That puts you in the top 3% of wage earners worldwide with 2 points. Now, there's no guarantee that you're going to be successful, that you have the patience and discipline necessary to become a consistently profitable trader. We will give you the tools you need to get it done. We'll teach you what you need to know to get it done. But ultimately, it comes down to you. Are you able to exercise? The strategy is simple. I think anybody can learn the strategy. But it comes down to you in that, do you have the self-discipline, to follow the rules, to not get frustrated, to not revenge trade, to not trade above your weight class, all that stuff, all the stuff that drags traders down. You have to rise above that. And that's the one thing we can't give you. We can't even really teach you. I can coach you, but you got to reach down inside of yourself and find the patience and the self-discipline that allows the knowledge and the tools that we give you to work. So with 2 points a day in the S&P or the equivalent in another market, you can earn as much as you want to earn if you're patient and if you exercise self-discipline. And when you get knocked down, you don't go revenge trade. You pick yourself up, you brush yourself off, and in time you learn that when you get stopped out, it doesn't mean you're wrong or broken, or that your strategy or indicators are wrong or broken. Getting stopped out is as much a part of trading as breathing is a part of life. I know I say that every day. I'll keep saying it every day because it's the truth. Can you learn how to take 2 points a day out of the market? Yes. I can teach you how to do that. I can show you how to find these windows of opportunity. But do you have the patience and self-discipline to set and wait for that window of opportunity to appear? Or are you just click happy? Just clicking that mouse, next thing you know, you've blown up your account. Or you decide, you know, those other guys, they use a hard stop, but I'm going to use a mental stop. If price drops down to here, I'll just get out. Well, maybe you will, maybe you won't. There's also things called flash crashes where the market can drop so quick, you don't have time to react. Or if you're in a short trade, the market can rally out of nowhere. And you're wishing you had a hard stop. Okay. Lag, retrace. Now this zone, we expect that to be good resistance. It will support, it will support, it will support. Now, zones are an area. Even the BBC can be an area. In the live training room, you hear Michael talk about momentum trades. A momentum trade is simply, in this case, the bearish momentum is so great, the downward pressure is so great, the price wasn't able to pull all the way back to the BBC. Price always reverts to the mean, but not every pullback goes all the way to the BBC. So why not just get short right here? Well, this low was support on this candle. If the same traders are at the table, it just may be support again. This low was support. So the idea behind this particular window of opportunity is I want to get below that support and that support. And I'm going to carve out my 2 points before I get to that support. Trading is not easy, but it can be that simple. And if you want, we'll teach you. Bruce asks, how come you never go into the slingshot? Well, because I don't use it. The slingshot was designed for the faster time frame that we use in the live training room. I do look at it sometimes, okay? Like I will take the short based on market structure, based on price action. If I glance down and see that the cycle is red and below the 50-yard line, that gives me a sense of, well, it makes me feel maybe a little better about the trade, but it's not a part of my decision-making process. So in this case, it's congruent with what we anticipate happening. Now, if price comes down and fills this window of opportunity, do you have to get out with 2 points? No, you don't have to. You can trail a stop. I mean, if buyers have thrown in the towel or in the process of throwing in the towel, this thing could drop like a rock. In the beginning, you should trade with a bracket order, which means you have not only a hard stop, but you got a hard target. Because sometimes price will go right up there, touch it, and then race in the other direction. Never actually trades through. So we'll see what happens here. Now, liquidity is an issue, and I mentioned on the S&P, there's always plenty of liquidity. So far today, we've traded 897,981 individual contracts. Now, if we go and look at our 30-minute chart, in the last 3 minutes, we've traded 5,830 contracts. So I point this out so that, you know, in case you're thinking, well, you know, 10 contracts, boy, could I even get in and get out? The answer is yeah, you can. Right now, 10 levels deep, there's over 2,000 contracts on the bid, 2,000 on the ask. And that's how many contracts there are at each tick, each price point. Okay. All right. So let's get this show on the road. Last night's Concierge Trade Alert for the S&P was to be long 37.20. The alerts came out at 8:15 p.m. So that was during the life of this candle right here. So we put in a swing high at 23. So that's 3 points. $37.20. So that's a 3-point move, but this one only went up 1.25 points. Okay, that happens. Got a high. Got a lower high. Now, the short side is 36.91. 36.91. Okay. You've heard me say important prices, important areas are almost always tested. So there was 2 triggers on the long side, but price never went anywhere. I mean, there was enough here to get your goal for the day. Over here at 36.91, so at 36.91, price dropped to 36.83.25. Basically 8 points, call it 7. At $50 a point, that's $350 per contract traded. Then price got back above the trigger. It's in the process of triggering a second time. Swing low, so actually it dropped here down to 89.25. And on this candle so far, we're down to 88.5. So it's dropped 2.5 points so far. Important prices, important areas, almost always tested. Now it's getting real close to that little window of opportunity. one thing you have to understand, and this is an important reason why you want to learn how to find this opportunity yourself. Now, in the beginning, we provide you with the alerts. I mean, you have access to the alerts for life because becoming a passport holder is lifetime membership. No recurring fees or anything. Hang on. The reason you want to learn how to spot these windows of opportunity yourself, just as I just spotted this little 2-point window here. You see, when I put out this number and this number up here, which was to be long 3720, I did that at 8 o'clock last night, 8:15 p.m. Eastern. We didn't trigger. This first trigger came in at 4 a.m. Eastern. The second trigger came in at 9 a.m. Eastern. This trigger came in at 11 a.m. Eastern. So the idea behind you learning how to find these opportunities yourself is that, you know, when I put out an alert, I have to look into the future, right? And we all know nobody can know the future. And I have to get some sort of a picture in my mind of what market structure is going to look like hours from now when this thing triggers. 20% of alerts get stopped out. That's part of the reason. And the other part is that the market just doesn't always do the next high probability thing. What's critical is that you learn to read the chart and know what the next high probability thing is. This way, when a window of opportunity presents itself, you're able to take advantage of it. You don't have to wait for an alert. You don't have to, stare at the chart from 8 p.m. till 4 a.m. You see this opportunity, you see this opportunity. You see this opportunity and this opportunity. All right, so we're at 36.86 and a half. And 2-point targets, 36.85. Now you got to be patient and see if it does it. We'll come back and look at it in a minute because I have much to do and I want to get through this. Okay. Now, notice how we just saw the S&P pinging back and forth between two zones for an extended period of time. These are actually this week's zones. Zone, up to the zone, down to the zone, up to the zone. When price gets above the BBC, it's telling you, I'm going to try to get to that zone overhead. And when price gets below the BBC, it's telling you, I'm going to try to get to that zone below. Plenty of movement here to get your goal for the day, or here, or here. Up to the zone, down to the zone, back up to the zone, down to the zone. And here we sit with a little double bottom right there. Boom, boom. Window of opportunity here, be more like that. All right, so last night the alert said to be long 32.65. The swing high was 32.60, so we never got up to 32.65. The short side was to be short 3,050. Okay. So from 3,050 initial trigger dropped us down to 3,018. It's 30 points, 32, 30 points at $5 a point. It's $150 per contract traded. Important prices, important areas. We get back above the trigger. And on the next trigger, we drop to 3,013. On this trigger, we drop to 29,944. That's a $500 per contract move right there. So one trigger, two trigger, three trigger. We get back above the trigger, and here's trigger number 4. And trigger number 4, we've got a low so far of 29, yeah, call it 30,000. 50 points, $5 a point, $250 per contract traded so far. Okay, that's the Dow. Next on the list is the Russell. Last night's alert on the Russell was to be long, 1981. Okay, from 1981, we put in a high at 84.9. So basically that's a 4-point move, $50 a point. Market made $200 per contract available. And then we get back below the trigger, it triggers again. This time it makes 2.5 points available. You get back below the trigger, trigger again. On this trigger, not all triggers are created equal. You got red and falling. I don't want to go long. Price dips back below the trigger. We're back to blue and climbing. I want a piece of that. Okay. So from 1981 to 1990, that's 9 points at $50 a point. That's $450 per contract traded. Short side for the Russell was 1967, and we have not been there during this session. Next on the list is crude. We have now rolled forward to the G contract. Hold up, G. Long 49.05. All right, 49.05. Now this trigger here, this first trigger, 49.05, it ran up to 49.13. 49.15 would have been $100. Then we get back below the trigger, off we go again. From 49.05 up to 49.33. It's $250 per contract traded. Back below the trigger. And so far it's up $150 per contract traded. The short side was 47.95. We have not been there. Okay. Next on the list, NQ. These are this week's zones. All right. 12,774 on the long side. 12,774. $12,774. Swing high. 79. 5 points, $20 a point. It's exactly $100 per contract traded. And then from 74 up to 89, that's $300 per contract traded. On the short side, 12,724. Actually, that should stretch over to here. So from 724, drop down to 707. So that's 17. It's about $300 per contract traded. And then from 724 down to 660, 60 points, $20 a point, $1,200 per contract traded. And then we got back above the trigger one last time. And so far out of this trigger, we've dropped to 75.5. Okay. Next on the list is gold. Okay. On the long side, 1895, swing high was 95.7. So Warrior made 70 bucks available, and that's it. On the short side, 1883. Swing low is basically 82, so 100 bucks per contract traded. What was it again? Short 83, and the swing low here was 83.1. So this one never triggered. Last but not least, silver. Silver flatlining. I'll open it up. Maybe it's not too bad. Oh, it's not flatlining. Okay, so last night's alert on silver was to be long 26.38. Never got there. Oh, wait. Look at this guy. Still didn't make it to 38, though. And the short side was 25.93. We did get there. 25.93. A 2-penny move is 100 bucks. $25.93. Dropped to 87. So $300 per contract traded. 200, 250. We're coming down again. That's it. Now those were the concierge. The logic alerts. We walked through those in the alert channel. And this week's results for the week. Logic 247, 66 alerts, 9 never triggered. Still waiting on 5, 52 actionable, 8 stopped out based on not risking more than $300 per contract per trade. 15% of actionable alerts stopped out. Okay. All right. Time now for our good word for the day. Reminder, the link to the webinar this afternoon is in the chat box. Today we'll talk about peace in the storm. Too many people think that by becoming a Christian, there'll never be any more storms. That's not true. When you become a believer, there's plenty of storms. But your faith can help you to have peace in the middle of a storm. The whole doggone world's going crazy all around you. But you have peace because you understand this is all temporary. You've got your sights set on the eternal forever. Philippians 4:7. And the peace of God, which transcends all understanding, will guard your hearts and your minds. Beverly LaHaye was terrified when her husband Tim began taking flying lessons. Right away, I started giving God my opinion and drawing my own conclusions. Fear was controlling me, she said. Tim told her to pray about it and just be open to the Lord. Let him know you're afraid of flying, that you're willing to be changed. She did, but there was no overnight miracle. She had to continually give her fear of flying to God, but ultimately it worked. Years later, when they were flying through a violent storm in a small plane, Tim noticed that while he was sweating it out, Beverly was fast asleep. When they landed, he asked her, "How could you sleep so peacefully?" She replied, "It's God. Only He could have brought me to the place where I could fly through that and be at peace." Now, sometimes God calms the storm, but most of the time He just lets it rage. But He calms us. Don't be discouraged when you have to turn your fears over to God again and again and again. That's how trust is developed. Knowing that Jesus cares for you, cast all your cares on Him continually. The moment they raise their voices, before they take control of you. That's from 1 Peter 5:7. Don't worry about anything. Instead, pray about everything. If you do this, you will experience God's peace, which is far more wonderful than the human mind can understand. And that's a good word for the day. I'll see you all this afternoon, 4 p.m. Eastern, at the webinar. This is an Ask Me Anything webinar, so bring your questions. We'll have a good time. I'm not sure who's in charge of refreshments, but I'm sure they'll take care of it. Thanks so much for tuning in. Hope you have a great weekend. Spend quality time with it. We've all spent a lot of quality time this year with our family. Some of us probably wish we were on a desert island or deserted island somewhere. But hey, love them while you can. Thanks for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.